estate loans and other financial opportunities mentioned on this show are offered by various companies, entities, and organizations that may not be directly owned, managed, or controlled by the real estate life. All credit decisions, including loan approval rate and APR, will vary based on your specific loan request and credit profile. The information provided on this show is merely to allow the listener the ability to become more familiar with such potential opportunities and to obtain more detailed information on the suitability of such opportunities to the listener's personal and financial situation from the companies, entities, and/or organizations involved.
A new home you've dreamt about for years, and there's only one thing standing in your way: getting a loan. Rest assured, United Mortgage Corporation of America is here to help make your dream a reality. Get answers, get results, get the service you deserve. What kind of loan do you have? Call now at 888-LIFE-980. That's 888-5433-980. Or go to the web at yourrealestatelife.com and take action today.
Welcome to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, mortgage loan originator, 233-410 with United Mortgage Corporation of America, NMLS 3189. Visit our website, yourrealestatelife.com. Get started at unitedforloans.com. That's unitedforloans.com. This is Your Real Estate Life. We're on Fox Sports Ventura, 1590 AM, 94.7 FM, KVTA, streaming at kvta.com, and on YouTube at Your Real Estate Life. We have a Sunday audience, and it's every other week. This is our Ventura show, but we have our audience from KEarth 101 who's listening at kvta.com. Write down our number. You're going to need it. 888-543-3980. That's 888-543-3980. Want to welcome our audience across the United States. We are approved to do loans in 46 states for DSCR, debt service coverage ratio loans, primarily for purchase and refinance and reverse mortgages. We are doing loans in 5 states: California, Colorado, Montana, Texas, and the state of Washington. I invite you to join us on Tuesday evenings. We have a webinar, California time, 5 p.m. Pacific Standard Time. It's a 1-hour webinar, educational, informational. It talks about the Money Max account. This is an incredible opportunity. It's a perfect financial GPS. I'd like you to email me directly, interest@aheadformoney.com, aheadformoney.com. I want to get you access. You can go to yourrealestatelife.com, our show website, and register on the bottom, and then I will get you out information. It's not AI, it's me. I'm going to respond. I'm going to give you access, some information, so you can attend. This information is invaluable, especially as we start here in 2026. I'd like you to be on the right path. I don't want you going down this 2-lane highway and then all of a sudden realizing the bridge is out and you got to make a U-turn. You don't have time to waste. I want to make sure you have the right decision and the right timing. Give us a call, 888-543-3980. That's 888-543-3980. We will continue on our journey, reaching one family at a time. Now, as we move into 2026, today's conversation centers around rates, readiness, and opportunity. Now, interest rates always get the headlines. You hear what's going on in the media. Oh, the rates were up and down. Every single day is that adventure for us in our industry. We look at rate changes of 1/8, a quarter, 3/8, 1 move, 2 moves, 3 moves, any given day. There's economic news that comes out each week. We'll talk about that in our next segment. But these items start way early in the morning here on the West Coast. Some statistics come out, but we have the government shutdown. We had some delays on some of those statistics. So we're looking at the Fed move. We're looking at what's going to go on our next meeting in January here, as now we're crossing that bridge. We're there. Well, the chances are quite low that we're looking at a January move. Now, as those chances go a little higher, we see the bond market, the mortgage-backed securities market respond. when that responds, we see mortgage rates get better prior to a Fed move, not after. So when you hear about it, it may be a little too late based upon the momentum. So we want to be ready. It's readiness determines who can act. If you get started, you might get started too late. So we have clients right now who are preparing. They sent in the documentation. We're getting the file ready, no cost to do so. We're getting them ready in order to trigger and react. But it's refinance for a reason. What is the reason? Is it rate driven, payment driven? Is it for home improvement, doing additions? Is it paying off other debt? Are you getting pre-approved for a purchase? I mean, just last evening, we had someone who got in touch with us. They're writing an offer. They're writing an offer. We have their documentation. We have a pre-approval now with the property address inserted to the letter. Now, a pre-approval is different than a pre-qualification. A pre-qualification is a conversation. Now, that's great. Good to hear it. Here you go. No, that's a conversation to understand. Getting the documentation verifies. That's part of the process. Now, there might be more things that need to be done during a loan process, but we have the general idea of income, overtime, bonus, the type of income, where the monies are, credit. All those things are important. It gives us the opportunity to understand what is going on. And that's what 2026 should be for you. We have a busy program today. I'd like to thank you for joining us here on Your Real Estate Life. I'm Mike Harris. We'll have more after the break.
Your equity position has started to improve? Call about the removal of your private mortgage insurance or mortgage insurance premium and save money today. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, NMLS 233410. That's my mortgage loan origination license, United Mortgage Corporation of America, NMLS 3189. I'd like to thank you for joining us today. This is our Ventura program. It's on Fox Sports Ventura, 1590 AM, 94.7 FM, KVTA, streaming at kvta.com. Join us at YouTube on that channel there at Your Real Estate Life. Like us, subscribe, and tell someone about it. Don't miss any of our programs. You can catch the audio by going to our websites at yourrealestatelife.com or unitedforloans.com. And you can catch also now us on camera on our YouTube channel, Your Real Estate Life. 888-543-3980. That's 888-543-3980. We were talking about interest rates. We were talking about getting ready. We want to make sure your opportunity is available, because understanding about both of those gives you the ability to succeed. You want your offer accepted. You want to be ready, whether you're buying your first home, managing equity, planning retirement, cash flow, investing, or income. In 2026, it isn't about waiting. It's not waiting for certainty. It's about positioning yourself correctly for an uncertain environment. That's really what our program's all about. It's about being ready. It's about education and information. Let's really kind of get started about it here. I mean, some of the key rate realities in 2026, rates are no longer historically low. Now, we had the crisis, 2s, 3s, 4s. So now we're talking about 6 and high 5s. Now, the 5s are very attractive. Now, you can pay points, fees, and buy down your rate further. We have a young lady right now who is looking to get qualified. Her debt to income ratio is requiring us to have a lower interest rate. We are buying the rate down to 5.375%. That 5.375% does not come without a cost, but it makes sense for her based upon getting a loan versus not. She is refinancing out of a high interest rate that she did with another, in the previous timelines. She was in the high sevens, and we're going to be taking her down. So she's going to save a lot of monthly. Her recovery time will be there. So we're going to look at those items as we shift. And as now we are roughly about a 12-month low for interest rates. As I talked earlier, we have volatility. Sometimes it moves 1, 2, 3 times a day, depending upon the economic news that comes out. So we watch that. Every eighth, depending on your loan size, $500,000 loan, every eighth in fee is $625. All of a sudden it moves once, twice, that's $1,800. That's your money. I spend your money the way I spend mine, sparingly. I want value for my money, and so should you. We look at mortgage rates. They respond to inflation, the labor market. I mean, the bond movement doesn't happen just because of social media. It really doesn't. There's actual items that occur. You think it drives that way. No, it's already going on. Now, waiting for that perfect rate, delaying ownership, it costs you tons of equity. It really, truly does. We got to look at the cost of waiting. A lot of times people say lock in the loan. I have a client who wanted to lock in the loan. We've already saved over $2,000 by not locking the loan. So we watch the market. Yeah, we can't be perfect, but we watch the market. We look at the timing. We look at what loans are closing. When's your closing date? Is it a purchase? Is it predetermined? Is it a refinance when you have your discretion? Maybe you have other debt. Maybe it's costing you more to wait. It probably is. We want to look at the numbers. We want to look at the net tangible benefit, but you've got to get started. 888-543-3980. There's a lot of programs that are coming out and a lot of programs that are already there, but many people don't talk about them. Whether you're doing a purchase with a grant or money that's forgivable seconds, low down payments. It doesn't take 20% down to buy a property. No, it doesn't. You can buy with as little as 0 down, 3% down, 3.5% down. You can get gift funds, seller concessions, money towards your close. There's temporary buy downs where you could buy down the rate for a year, 2, or even 3 years, or buy it down permanently. But you got to look at the cost basis of what makes sense. Of lately, we've done some 1-0 buy downs where you buy down the rate 1% the first year, but then it goes up that 1% and stays. It's a form of a variable rate loan, but it's determined. But it's also, if it's not your money, maybe the seller is contributing towards that buy down. That's going to help you ease into the property, gain your footing to save money in order to gain what you need to know when you're in that property. I like to try to prepare that journey. I don't want you in the home and going, oh my God, I'm here, what's coming next? No, we want to understand those costs, those hidden costs that may occur. We want to make sure they're budgeted. That goes into what we talk about on Tuesday evening with the Money Max account. It's a perfect financial GPS program. I do want you to attend. Whether you did a loan with me or anyone else, or your lender, your mortgage banker, your mortgage broker, I love for them to attend because I want them to give that gift to their clientele. Join me. Interest at aheadformoney.com. Interest at aheadformoney.com. When you send that email, I'm going to send you out some information and an invite to that Tuesday night webinar at 5 p.m. So it's really about structuring and preparation and education, understanding what loan's best for you, not your family, not your friends, not your coworkers, but for you. Are you in the growth stage? Are you looking to gain more income coming in the door? Are you buying more property? Are you looking to eliminate debt, possibly to create wealth? Or are you just trying to get more discretionary monthly monies by paying things off? Now, a lot of people will throw darts and pay this or pay that, and maybe a little here and a little there. That's a bad potion. It sounds like it's a chemistry experiment. I don't want the lab to blow up. Let's make it done and get it done right. 888-543-3980. Now, first-time home buyers, monthly payment strategies really matter. And it's not really only about rate. We had a lot of individuals who had to look and bargain and make sure that their insurance rates were affordable, making sure they were able to gain insurance, flood insurance, very large topic in recent times here. We want to make sure that the right coverage is there. If you're buying a townhome or condo and have an HOA, making sure it's properly funded, making sure the insurance is in place, making sure engineering reports are there for necessary items that have now come up. We want to make sure that all of these items are looked at and prepared for, so your journey to the close and your home ownership path is clean. Whether it's a purchase or refinance, whether you're going forward or in your reverse, primary or second home or investment property, we're here to help. United Mortgage Corporation of America, United4loans.com, 888-543-3980. Now, rates shape the environment, but they don't decide the outcome. Planning really, truly does. And if you gain anything today, it's being ahead, not behind. Now, first-time homebuyer readiness, it's that pre-approval. I'm going to emphasize that again. It's me getting the documentation, whether it's 2 months bank statements, pay stubs for 1 month. If you own property, it's the mortgage statement, the insurance policy of the existing. If you're keeping the property, of course, if you're going to keep it and rent it out, what rents should or will be, depending upon if you're self-employed, salaried, overtime, or bonus, whether it's the tax returns, the federal returns, corporate returns, looking at the Schedule E for real estate. All of these things matter. And these are things that we evaluate. We look at odd deposits. God forbid, I don't know, did you borrow funds and you got another payment? We want to take a look at these irregularities and make sure we make them approvable. So we look to prepare. So when I issue a pre-approval letter, you've been pre-approved for the purchase of said above property. The property may go through its appraisal, title, making sure everything is in order, but you have been pre-approved. That's the process we go through. But it's understanding these programs. I talked about buy downs. I talked about permanent buy downs, temporary buy downs. All of these things help you to negotiate your ultimate purchase price. And of course, we want to make sure it appraises. And that's where you have experts. You have your realtor, your expert, your professional who knows the market, knows what's happening, what isn't happening, what concessions can and cannot occur in different neighborhoods and environments. Now, I have a broker's license here in the state of California, but I don't list, I don't sell, I lend. So we look to refer you, if you do not have one already, a professional. Because you think hiring a professional is expensive, you try hiring an amateur and see how that works out for you. Okay. I've seen a lot of issues, a lot of problems over my, 38 and a half years now in lending, over 19 and a half now on radio. I've seen a lot of things happen, and I don't want that to happen to you. We're going to look to solve problems before they even come up. We're going to have open discussion, understand your goals of what you're looking to do, whether we're looking at FHA financing for low down payment, maybe a little bit better for lower credit scores or credit challenges, whether it's a VA loan, thank you for your service, whether it's 0% down, utilizing that. Those of you who have FHA and VA loans, we are doing streamlined refinancing, lowering people's interest rates with little to no cost. So if you have a VA loan or an FHA loan you've done over the last 2 years, I want to speak with you. I want to lower your payments. I want to lower your rate, and I want to go over what we can do to put you in a better situation. Conventional loans, they do also come with low down payments. We've been closing some of those with 3% down. We've been putting even silent seconds or seconds behind that are forgivable. We've had through assistance programs. They are underutilized, and we do want to go over those with you and see about qualifying. Sometimes it's just using your property address where you are now, and you qualify for possibly monies towards a potential new purchase. So we want to see what we can do. Now, some of the mistakes that we've been seeing, well, should we wait? Maybe the rates will go lower. And then when they go up, do you think they're going to come back? So we're in this endless process of back and forth. The thing is, when rates look to change, as I said, they're usually prior to a Fed move. Right now, January looks like it's off the table. So now we're looking at March. Chances are March or April. So if we get another move and the bond market starts pricing again, great. But right now, we're looking pretty good. The margins between the interest rates and what the 10-year treasury is doing, getting a little bit tighter, which is actually good. There's not as much fluff in it. So we're seeing interest rates doing well. We're closing with some high fives, low sixes, depending on loan to value, the equity position, and credit score. So we're looking at all these items. But you get all these confusing things. You go online. Oh, the interest rate I see is 5.6, and then the APR is 6/6. Then, oh, gee, it's charging points. Oh gosh, it's this loan. It's over a 740 score at a 60% loan to value with. You got to look at the fine print. They're confusing estimates. You're comparing an apple to an orange to a banana. That's what you're doing. They're not the same. When I get phone calls that come in and say, hi, what's your rate? I don't know. What do you want to hear? My gosh, I can tell you anything. I mean, you're shopping, and I understand, but you're shopping before you understand how it works and the monthly obligations, so it's all confusing. People are doing this and doing that, and they're coming from different directions, and it doesn't make any sense. Speaking about not making sense was when the government shut down and we didn't have economic news, we were trying to figure out where the market was. So during this first full trading week, on Monday, we have factory orders coming out, provides insight into business demand and manufacturing momentum. It impacts broader economic outlook and the bond market's tone. So we're going to be looking at what's going on there. We have the JOLTS report on Tuesday, job openings for November. So we're going all the way back to November now. Now we're January and we're talking about November. But it measures labor demand and hiring pressure, closely watched by the bond market as a signal for wage inflation and labor tightness. So we're going to watch that. On Wednesday, we have the ADP private payrolls for December. So now we're in December. So it's the early read on the employment trends ahead of the government jobs report. Now, this can move interest rates, but it kind of deviates, meaning, I don't know. We watch it, but it's not as instrumental as that employment report. So also on Wednesday, we have the ISM Services Index for December, one of the most market-sensitive reports of the week. It makes up the services of the U.S. economy. It influences rate direction. So we are watching that. So as we start the week and get the engines rolling, we're going to hop right in. We have a number of loans that are in process, some refi, some purchases, and some of this stuff really makes sense for us to make some decisions about hedging, maybe locking if we're looking to close in a decent period of time from these reports. On Thursday, we have weekly initial jobless claims ongoing each and every week on Thursdays. And of course, a sudden change could cause some short-term reaction. I talked about early in the morning, all of a sudden, here we go again, right? But Friday's the big one. We have the employment situation report. We have non-farm payrolls for December. One of the most important reports of the month. I talked about it the week before. This is the month. It impacts mortgage rates through the employment growth, wage inflation, and labor participation. So the first week really sets up large. It really sets the tone for what's going to go on, and whether my clients are looking at an eighth higher or an eighth lower, or fees or rates. We really watch this and we want to be ready. We got a number of loans that are in the position to look at locking this week, and we'll make those decisions as we see the trend of direction as the bond traders are coming back. Many of them were out or on vacation during the end of the year, and we're going to see how we shape up. So, even with light or thin trading, the market moves and reacts. And sometimes those swings are a little bit more. So those swings, I want to make sure we capture more money. That money is yours. It's in your wallet and nobody else's. You don't want to gain market and not get the benefits. That is so very important when we look at your real estate life. I do want you to join me on Tuesday evening at 5 p.m. 5 p.m. Pacific Standard Time. Change it to your market if you're watching to us on YouTube at Your Real Estate Life. It's a 1-hour webinar. It's educational. It's informational. It shares much of the details to the Money Max account, a perfect financial GPS program. Now, In our next segment, we're going to go into detail a little bit about the program. But what it does is it gives you perfect information and advice without talking back to you. Now, you could ignore it just as if you're driving in your car and you got your GPS saying, you miss a turn and it says recalculate and gets you back on path. But when you're looking at finances and you're guessing, do I pay a little this one? What should I do? I'll round it up. You're doing something, and that's great. But I want to get you in the hole, not on the green. And of course, I don't want you in the water or the sand. Even though you might be a good sand player, it doesn't mean you go find the sand so you can say, hey, I'm good at this. Well, how many times have you been there, right? I want to make sure you're getting your goals and you're reaching them as fast and really as cleanly as possible. 888-543-3980. That's 888-543-3980. You know, I've been looking at really what's going on about these various programs. I talked about buy down programs, 2-1 buy downs, 1-0 buy downs, seller concessions. We also have investor loans. These investor loans, DSCR loans, debt service coverage ratio loans, we're finding investors who are buying, and the loan is qualifying based on the rents offsetting the monthly payments. These loans, non-qualified mortgages outside of Fannie and Freddie, are very, very popular, and we're doing them in 46 states. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. I thank you for joining us today. We'll be back with another exciting segment right after this break.
Looking for a place to start? United for Loans is the place for you to start your refinance or purchase process today. Call 888-5433-980.
Yes, it's a little scary right now, but every crisis presents an opportunity. How many times have you looked back and said, why didn't I act? Do not try to navigate lending without a map. Tune in Sunday at 7 a.m. on K-Earth 101 with host and CEO Mike Harris of United Mortgage Corporation of America to discuss your real estate life. What should I do? Buy, refinance, sell, or hold? United Mortgage Corporation of America is open for business and ready to lend. Visit unitedforloans.com or call 888-543-3980.
Lending can be a bit confusing. Numbers can be taught from one direction to another. How can you make it all stop? United Mortgage Corporation of America, unitedforloans.com can be your guide. Call directly at 888-5433-980 for what you need to know when financing a home of your dreams or commercial property. Call now at 888-5433-980 or visit at unitedforloans.com. That's 888-5433-980.
I've been laid up from work, my friend is good. Kids all need brand new shoes.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, mortgage loan originator 233410 of United Mortgage Corporation of America, NMLS 3189. Visit our website for our show at yourrealestatelife.com or get started at unitedforloans.com. That's unitedforloans.com. We are for loans. We're just not for the interest that you're paying. This is Your Real Estate Life on Fox Sports Ventura, 1590 AM, 94.7 FM, streaming at kvta.com, and on YouTube at Your Real Estate Life. Write down the number, you're going to need it. 888-543-3980. That's 888-543-3980. Right before the break, we were talking about our Tuesday night webinar at 5 p.m. Pacific Standard Time. It's a 1-hour webinar. It's educational, it's informational, and it talks about the Money Max account. Email me directly at interest@aheadformoney.com, aheadformoney.com, or go to yourrealestatelife.com to register at the bottom of the page. Now, you'll gain unique access. You're going to get additional information. You can also schedule a time directly with me. You can schedule that prior or after that initial 1-hour webinar. Prior, you're going to get some information, some background, understanding. After, it's going to be kind of a repeat of sorts and a re-emphasis, and then we can have our follow-up. But in our individual meeting, it's guideline to you. We're going to talk about your budget. We're going to understand the ins, the outs, the monthly, the quarterly, the semi-annual, the annual items that you spend, and what your leftover is at the end of every single month, whether it's a penny, a dollar, $100, $1,000, $2,000. How much is it that you have discretionarily left over at the end of every single month? And what are you doing with it? Is it going in earning nothing in a checking account? Barely anything in a savings? Is it working on your behalf? We discussed that as well. It's making sure it's optimizing money for you and not your lender, not your creditor. Your lender loves you. You don't need that kind of love in your life. And I say it this way, if you're renting, this program works for you as well. And your landlord loves you. You don't need that kind of love in your life. You are making a mortgage payment. It's just not your own. So we want to show you how you can do better planning, keeping more of your money on your side of the ledger. So you're moving from the bank's plan to paying off debt to then creating wealth. Now, I've utilized this program myself. I thought I knew what I was doing, right? For all these years, I've done fairly well. But I was on a plan to take 26.4 years down to 12.3. Fantastic. Through the program, it took me down to 7.9 years. That additional 4 years saved me over $100,000. Makes a big difference in one's life. 10,000, 20,000, 50,000 makes a big difference. And if you can utilize this opportunity to eliminate and have more cash flow, eliminate interest and debt, that's the difference. Now, when you get a home loan, most home loans are amortized. Amortization, you get a schedule of your amortization. Early in your loan, you pay a lot of interest versus principal. And I challenge you, pull out your mortgage statement or go online. How much of your payment is going towards principal and how much is going towards interest? Now, until about 18 to 22 years in on a 30-year loan, you're not even 50-50. So if you're over 5.2%, you're technically paying over 100% back. So if you borrow 500,000, you're paying back over $1 million. The goal is to bring down that interest volume. Interest volume. That is really truly what you're paying. When you closed on your home loan, you go to the bottom of the page on your loan disclosures, or your closing disclosure, it had what is called total interest percentage, in parentheses, tip. It says it all right there, tip. Now, how much of a tip do you leave when you go to a restaurant? Are you leaving over 100% tip? Some do, most don't. Are you leaving 50, 30? Possibly. You know, the goal is to bring that down because you're leaving a tip for the bank. And they know technically or usually every 5 to 7 years you're either moving or redoing something or needing something. So you start that process of your amortization again. Our goal is to move further down that amortization so you got more money going towards principal than interest. Now, we've been working with many of our clients on a home equity line of credit. When you have equity in your home, you can utilize that equity to do what is called a home equity line of credit, a HELOC, not a hemlock, a HELOC. That HELOC is simple interest. Some you can draw for 3 years, 5 years, or 10 years, up, down, back, and forth. And it has an interest-only payment. That is what I like to have our clients look at, because that interest-only capability, simple interest, allows to move down amortized interest and move 6 months, even more, down the path of paying more money towards principal and eliminating your interest footprint. Now, that's utilizing a home equity line of credit. The Money Max account does not require a home equity line of credit or even an insurance policy or other vehicles, only requires a checking and savings. That's it. You can be renting, not even own a home. You could have student loans, car payments, personal loans, other items, credit cards. It can work wonders. Register. Let's get some information out to you. Let's see if it works good for you. If it doesn't, hey, be the first to tell you it's not for you. But if it is, look at the money it can save. Interest at aheadformoney.com. You can call 888-543-3980. That's 888-543-3980. We've seen individuals 55 and over, 60 in some states, 62, using other products, utilize a reverse mortgage. Where that comes into play, a reverse mortgage has an optional mortgage payment. You worked hard for your home. It's time for your home to work hard for you. You have equity. It's tied up. But if you were to eliminate the current first mortgage payment by getting a reverse mortgage, and you were able to redirect those monies that you were spending to eliminate more expensive debt, then possibly direct it back if that's your choosing. But we are using a reverse as well as a financial planning instrument when it comes to your personal finances. A mortgage is more than just a mortgage. It's a financial planning instrument, and it should be looked at that way. We've had some reverse clients keep their existing loan, but they needed more funds and the equity was tied in the property. You can get a home equity line of credit, but there's also a reverse second mortgage that allows you to pull money out with an optional payment. That optional payment allows the redirection, utilizing those funds to pay off debt, to be in a better position to then decide whether you want to direct it towards that second once your other items are clear. Planning instrument. I'd like to explore these options with you, whether it's a reverse mortgage, a home equity line of credit, potentially a refinance. We want to free up your funds for your best options available. Thank you for listening to us here. My name is Mike Harris. We'll have more after the break.
Get pre-approved for your home purchase. Your landlord loves you. You're making their mortgage payment. Own for less than you pay for rent. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debt, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, mortgage loan originator 233410 of United Mortgage Corporation of America, unitedforloans.com, NMLS 3189. Visit our show site at yourrealestatelife.com. You can get started on the loan process. Now, that loan process, yes, you have an application. Sure, we do. But generally, I like to gather documentation so we can build that and see what's missing. So whether we need the, your 2 years tax returns, the bank statements, the pay stubs, the other items that are necessary, knowing if you're self-employed or salaried, we gather, we get, we build. We look to get you pre-approved. Now, a lot of companies will lead with running credit. Now, I like to have a conversation about credit. Now, you have access to your credit report, consumer reports, and have an idea of where your score is. That usually is enough to have that conversation. Now, eventually, we look to run credit. Now, there's what is called a one bureau. There's 3 bureaus, tri-merge. There's all these fun little things. Now, credit reports have gone up a lot. You think they're inconsequential and they're easy. My gosh, it's like $123.50. Holy cow, for 3 credit report? in order to use for a home loan, and it's good for 90 days. So these things are not just things that throw around. Now, we can do some stuff that doesn't necessarily run on your affect any credit score and all that. We can discuss it. But I like to lead with documentation, income verification, making sure we're in the right area of what we want to do. And then we have that discussion about credit. And there's no reason for you to give me misinformation, because it ultimately is decisions that are being made about your direction. So we have those talks. But give us a call, 888-543-3980. Follow us on YouTube at Your Real Estate Life. And again, that number, 888-543-3980. We were having a talk regarding the Money Max account in our webinar on Tuesday evening at 5 p.m. Pacific Standard Time. Email me at interest@aheadformoney.com. The Money Max account, it uses algorithms. Holy cow. I mean, you may not like math, but I do. But it doesn't mean I sit there and do algorithms and computations and I'm a perfect computer. Now, I can do a lot of good things and I understand the concepts, but it doesn't mean I get the same results. Now, I'm not a perfect solution here. You have 6 different decisions. There's 720 combinations. Good luck every single month getting them right. Now, talked about it earlier. You can use debt avalanche, debt snowball. You can analyze different things, do this and do that. But this program, it analyzes the volume, the daily interest accrual, discretionary income. Dollars are moved mathematically, the most efficient way in each direction automatically. Now, no one touches your money, but it gives you perfect information to allow these decisions to occur. And the balances and the items and the follow-up and the execution is all there. Now, the difference between paying $200 today and saving and paying $400 later, it's a big difference. And micro manages all these decisions that you don't have to think about, but get perfect advice and information. Exactly the date you are going to be debt free is shared with you at all times. At all times. You could look at new debt. You could add in what if scenarios. You can actually add in about buying a home. You can look at investment property, changing the rents, what it means with an extra payment. What is the decision prior rather than after? It's interest rate versus interest volume. It teaches you these key points. Very, very important. Join me on Tuesday night, 5 p.m. Pacific Standard Time. I want to see you there. I really, truly do. It's incredible information, and I can get you out some prior. But it's funny because people at 3% on their amortized first mortgage, an equity line at 7 can be cheaper than 3. You think it sounds ridiculous. How can 3 be better or worse than 7? It's not the rate, it's not the number, it's the type of loan and how it's being paid and how it actually comes out, whether it's simple or amortized. It makes a difference. It truly does. Opportunity isn't found, it's structured. And the banks have had all that opportunity because of the way it's been structured and the way we've been taught and the way we follow. You've been getting in line without knowing the line you're in. We've heard all this fun stuff going on a 50-year mortgage. Now, the 50-year mortgage sounds great if you want a lower payment, probably pretty close to interest only. But it goes on, and what you've done, you stretched out your payment. Think about this. When you go buy a car used to be a 3-4 year loan, 5-year loan, maybe 72 months, 84 months. Holy cow. Car loans can go up to 12 months. 12 years, I'm sorry. It's crazy. Because what they're doing and what they ask you when you go in, what kind of payments are you looking for? Your loan is being structured on the payments you want, not your rate. It's moving the term further for affordability. In some cases, it makes sense if you have better things to do with your money. But sometimes it's stretching it out for affordability and you're right on the edge. And you need to make sure what is going on and how that is working for you. So very important. Join us Tuesday evening, 5 p.m. Pacific Standard Time. Send me a quick email. interest@aheadformoney.com, aheadformoney.com. Now, this is for all 50 states. We've been helping people all over the United States save money. It's freeing up and utilizing discretionary in order to eliminate your interest footprint. 888-543-3980. Go to yourrealestatelife.com, register on the bottom of the page, and we can get started. I want to help you from A to Z, your personal finances, but also looking at your mortgage setup. If you have a great loan, I'll tell you. If you don't, I may give you advice. In the states that I'm able to close your loan, I'd love to help. I'm never too busy to work or speak with you. If it's a state that I'm not licensed to lend, I want to give you the proper referral and information so you know what you're doing on your journey. I can review documentation and be that friend going over it with you, and I'd be happy to do so. We've helped many in many different states all throughout, past clients, potential future clients, but clients that were closing with others as they were doing stuff in Florida or Mississippi. We've had some recently in Tennessee that have been relocating. We've been helping them decipher and go through some information, and we've saved them a lot of money. Now, that has resulted in some referrals to some of their relatives in states that I do help, but I will look to get you the right professional if you don't have one. But I do want to review the information and make sure you get every dollar and every dime you deserve. It's really important. I briefly mentioned earlier about a DSCR loan, debt service coverage ratio loan. Depending upon the rent that is coming into the property, the rent offsets the new mortgage payment, principal and interest is included. We take a look at that. Depending upon how much it actually offsets, it does change some of the equity, down payment, and sometimes, of course, the interest rate. So we want to take a look at that. Sometimes you don't have a renter yet. So sometimes it's a no ratio. So we look at those possibilities as well. But usually the property does support itself. Depreciation is secondary. And of course, in certain states, you look for that appreciation. In other states, you just want the rental income. So we want to look at that and look at the leveraging and look at how that performs. And we look at that long-term demand to that property market and how that works. As I said, I do that in 46 different states. We have the equity planning component that I've been talking today. We talked about the usage of reverse mortgages, reverse seconds, home equity lines of credit, and even home equity loans. I'm not a big advocate of the home equity loan for the amortization, but sometimes it makes better sense. If you're getting a loan that's lower than your other obligations, we can make that offset in order to then eliminate it as fast as possible. So sometimes you got to do a two-step, one decision that leads to the other. We again talked about the money max account, a cash flow optimizing strategy using to offset through sweep accounts. So very important. As we start 2026, buyers, approval first, shopping second. We need to take a look at your items first before you shop and have a deadline on you. Because what happens is, oh, we found a property. Can we get pre-approved? And you've not talked to anyone. You think you know. We want to make sure you know. Now, homeowners, you're not in the market. You're not looking to buy. Let's do an annual equity review. No emotional decisions being made. Nothing. But what I'd like to do is run a 10-page report on your property, letting you know the value from the lender's position. It's not going to some fancy sites and all that and getting all the information that's all over the board. This is what the lender looks at for property evaluation. Sometimes approvals are made utilizing this without an appraisal. Let's do a home review. If you want, you could send your statement, your mortgage statement, to statement at, go statement at unitedforloans.com. unitedforloans.com. When I get that statement, it'll have your name, it'll have your property address, have your balance. Please include your email. Actually, when you send it, I'll have your email as well. I'm going to send you back a 10-page report. That 10-page report is going to have everything you can ever imagine about your property or a property that you're looking to know more about. Happy to do so. Just this past week, we had a number of our clients who are looking to write offers. So With the pre-approval letter, I also gave the 10-page report, included that to the realtor who's then negotiating the sale. Some cases, we had a higher value than the listing price, which is fantastic. They have built-in equity. In some cases, it was right there. So it gives a little bit of knowledge additionally to the professional, the realtor involved, in order to negotiate the best transaction possible for you, the buyer. But, we look at that. But investors, we talked about the flexible programs using DSCR, retirees, we talk about lifestyle. It's using your equity in order to gain further progress to your goals. It's making some of these harder decisions today that maybe are a little bit more clear than what they could be in the future. But that's your money, and it's keeping that money on your side of the ledger. Now, the big picture, education beats speculation. Flexibility beats rigidity. Planning beats procrastination. So many people, well, we'll do it. We'll do it. We'll do it. Same way you're doing with your taxes. The year is over. Gather the items. January, you're going to start getting your W-2s, 1099s. Gather the items. CPA's telling you, get them together. And you got this shoebox. Some of you still do. And you're putting everything together and you're getting it ready. Let's get it done. The year has started. But what are you doing about it? Let's put 25 to bed. Let's get 26 started, and let's get it done right. The people who succeed in real estate aren't the ones who guess the market right. They're the ones who understand their options and act immediately. We need to get your footing, understand where you are, where your goals are, and what you're looking to achieve. I don't want to be the New Year's resolution, oh, gee, let's lose weight, let's do this, let's do that. No, we're going to get it done and move down the path, and you're going to have a new item to achieve. Whether it's getting rid of the old that's outwore its time. I mean, let's look at it this way. You got football season going now, playoffs. That's great. And we're looking at how many teams are involved. More teams than they used to be, right? But only one team finishes on top. And even that team that finishes on top tweaks and does other things. They have retiring players. They draft new people. They got people who are actually getting better and understanding the system. They make trades. What have you done with your mortgage? You continue to make a payment. But you need to evaluate it. And that's why I talked about this annual review. It's understanding what's there today that can better work to what you have to be integral to all of the items, not just it itself. It's a team effort. And when you look at the teams that win the championship, on paper, sometimes they weren't the best players. They were the best team. It's important to have a perfect offensive line protecting you against the defense. You want to make sure that your offensive line does not let that defensive player come into the backfield. And now you're a scrambling quarterback. I don't want you scrambling. I want you to be able to move down the field and score. And it's funny, you use this vernacular. The team that scores the most wins the game. Yeah, amazing how that is, right? Now you could have a very good defense and, defensive, offensive teams, but in this case, we're the offense. We're moving down the field. We want to protect ourselves against the defense, but we have to have a good offense. Only one person lets you down on that offensive line, you're scrambling. And our goal is to make sure you have the right professionals on your team and you are aware. Now, you don't have to be the one driving the bus. You could be a passenger, but you like to know where you're going. And that's where I come in. We want to identify your goals, your thoughts, what we are doing, and then we want to make sure you can proceed in that process. And it starts with the pre-approval. If you're looking for financing, you need to make sure it's in place. You need to make sure what you need to do to be in a better position. We've seen loans where we've improved the credit score, 1 point, 5 points, 10 points, 20 points, 40 points. Depending upon where you are and what is going on, we can move credit higher to lower the cost of money. Starting early is best. I have a client right now boy, 2 years we've been going through a process of looking at property. Generally, it doesn't take that long, but I've been a part of her family many, couple of years now. And we're actually at a point where we think we got it done. We were ready a long time ago. She was needing to be ready based on what was changing and going on in her life. But I've been there throughout this process. We've been working through that process, and looks like we're going to get there. During that process, she has referred me other clients, but we are looking to help her. We want to get it done. 888-543-3980. That's 888-543-3980. We want to get the job done for you. As we start 2026, we put a lid on 2025. A lot of things happened. A lot of things didn't happen. We want to make them happen for you. 888-543-3980. Go to yourrealestatelife.com or unitedforloans.com. Our program, this is our Ventura show. Every week we are on Fox Sports Ventura, 1590 AM, 94.7 FM, KVTA. We stream at kvta.com, and we're on YouTube at Your Real Estate Life. Every other week, we are on KEarth 101, streaming at KEarth101.com. Our shows can be caught on audio on our websites. You'll see them on the bottom of the page where you can listen to each and every show. But give us a call, 888-543-3980. I want to talk with you, and I'd like to see you on Tuesday night at 5 p.m. Send me an email, interest@aheadformoney.com. Until next week, you're listening to Your Real Estate Life, and what kind of loan do you?
United Mortgage Corporation of America, unitedforloans.com will continue to take your calls after the program. Call now to start your home loan process at 888-5433-98.
I'll be standing by to take your phone call after the program, 888-543-3980. We have a very busy 2026 planned, and I want you to be part of it. 888-543-3980. It's about preparation. It's about being prepared for your direction and thoughts. I see you on Tuesday night at 5 p.m. Talk to you next week.